Hello guys. So today I'm going to be sharing with you how I caught and my reasons behind the two gold trades I took today, being Wednesday. Um, on the first screen you see I took the first sell here, and then this was my second entry. I was actually looking out for an extra sell on the second sell, which actually later played out. Now this trade was a little bit heartbreaking because it was a snipe entry. Obviously, the first candle took me in, and price started dropping aggressively, and I broke even. Right, for traders that actually do that break even, they would understand what I'm saying. So I broke even though I did not take partials, and the next candle actually reversed aggressively as well, and still tapped into my entry. And breaking even means I set my stop loss to my entry. So when that happened, actually price took me out and I was out of the trade. I didn't lose any money. I didn't make any money. It was more like I was neutral basically. And another candle still came up again after it actually moved out from the entry and still touched that entry again. But at the end of the day, the trade played out well and it dumped. Hitting a take profit that would have, if I had not been taking out 8R total, and the first trade was actually 8R as well. So at the end of the day, the trade would have been over 16R made from these two trades, but I guess the second one just did not happen. So basically in this video I'm going to be showing you guys how I caught those trades and the reason behind me taking those trades. Now, if we look at here, you will see that price was obviously very bullish. We've been bullish for a while on gold. I trade gold mostly, and that's like my major pair, what I focus on. And you see that price was very bullish since last week. But sometime last week, we swept a low here, and this became a very strong swing leg for us, for those people that trade like this. So this became my very strong low, right? And given that had become my swing low, I was expecting here to hold and be strong. While we had a break of structure to the upside, price mitigated a higher time frame supply here, and we were reacting from that supply. But I was expecting this supply to just be some kind of reaction, and then we continue the uptrend, but that did not happen, right? But instead price actually came here. There was a zone here that some people were trading from. This was actually a valid zone, but price reacted to it and still broke down. So meaning that this trend for me had turned bearish. This had become a bearish market move. Now, that aside, I've seen my structure. I had decided, okay, my structure, we are now bearish, right? Now, since we have become bearish, I'm looking for sells. But if you look at here, you'd see that this had become a reaction zone for me. This had become a reaction zone for me, and I was going to sell from there, but there was no liquidity here for me to sell from. So I was waiting for price to actually use this leg as this high as liquidity, meaning that I was going to enter from, say, this zone as my supply zone and keep selling, right? Now that might still happen later, but basically after price got into this zone of supply, which I'm using as my liquidity, because there was no liquidity down here to say, okay, I'm selling from there, unless if you're considering this reaction here as your liquidity to sell from. But for me, that's not exactly enough liquidity for me to sell from this zone. It might still happen, it might hold it, and then would have a sell to continue like this. But for me, that's not enough. I would still wait for this extreme zone for price to come into here, and I would sell. But basically, this is on 4 hours time frame, right? Now moving to my entry time frame being 15 minutes time frame. That's where I took these trades. But that 4 hours was just to, look at the bias of the market. So basically, this is that reaction zone that price has traded into. Price has traded into a fair value gap right here. Now, when fair value gap is actually a place that price can actually move out from, if price gives a good reaction from there, it could actually move out from there. Now, after that, internal structure was very bullish, and seeing that, I saw that this was a sweep of a low. This had become a strong low. Now it's caused a break of structure to the upside here. Now that break of structure has a low here, right? Now this low had become my low of interest. Price came up, gave some kind of reaction, and broke below it, giving another pullback here and all this. So seeing this, I spotted this to be a break of market structure to the downside, leaving me an inducement, which price came back, took it and dropped. So basically what I did here was I spotted my break of structure to the downside. This had become my supply chain, right? This became my inducement. This had become my strong low, my strong high rather. So I took this trade from this point, targeting this. I was going to target this area of liquidity here, but I decided on a second thought, let me just take the 50% of it, right? And then I took this trade from here, and I left the market here. Now that was the first entry. I will go down to a lower time frame so that we can see better. We'll see it clearer, right? Now that was the first trade I took today, and this went smoothly. Now following structure, you see that we've now had, after that had happened, we've had a break of structure here. We've had a break of structure here. If I go to 15 minutes, you see that that candle did not close below. It was a week, right? And for me, it's not a break of structure until it's a week close, right? So that candle had closed there, that candle had closed there and left us a break of structure here, sweep of a low. So this became our protected high. This was a sweep of a high. This became a protected high. So my new trading range was now within here and here. Now how I trade this kind of setup, I had seen my liquidity. This was the reaction zone. In my last video I talked about trading from liquidation zones. Now this was the reaction zone. Why? Because it had caused a break of structure to the upside here. I explained this in my last video. If you've not watched it, please do well to go watch the previous videos I've made, and do well to leave your feedbacks, your comments. If you have questions, you ask, and subscribe, like and share. Now moving forward, this had become a reaction zone that failed. This now looked like a demand that people wanted to buy from. Now apart from that, it had caused a break of structure here. Price had broken structure here, but if we're looking at it from the sell that we took, that was just a sweep of liquidity. So for us, that was not a valid break of structure to say, okay, we are now buying. No, it was just a sweep of liquidity. Moving forward, we now have this reaction, a reaction. Now I gave rules, I gave criteria that my reaction zone have to meet and things that I expect it to have before I consider it a valid reaction zone. This one did not have those things. If you want to know those things, do well to watch the previous video. You'd find it in the playlist, liquidation entry. Now this one had none of those, which is now why it became liquidity for me. I explained why in that video. It became liquidity for me, and seeing that it became liquidity, I need to get a zone above it for price to respect and give me a clean setup and a clean entry, which is what I did here. I took 50% of the fair value gap. This is not something I just guessed. It's a trade that is a setup I've actually seen a couple of times play out. So I took 50 using my fib retracement. I checked it, and I took 50% of the fair value gap, and that's how I placed my entry there. And using this flip zone as my liquidity, you see that price respected it and it played out pretty well, right? It was a very, very proper entry that price came in, tapped me in, even though it gave a couple of reactions there. We were battling between sellers and buyers because lots of people will actually buy, right? Someone, I know a channel that actually dropped a buy signal from this zone and it tapped them in from here, right? Tapped them in and they were in good profit from here. Now, this was obviously against trend. Yes, it could have played out, but I wouldn't have taken this trade. Now, this tagged them in and they were buying and they were in profit as of this point. Now, I came in here on a sell and price took me, so it was more like a battle between I and them, and price reacted, it was playing with the both of us, and then finally went my way and took them out. So, and it ran pretty well, as you can see. An 8-hour trade, very smooth, very straight to the point, very wonderful. So this is actually a very good setup, another very good setup. Remember, the first entry was basically a supply entry with inducement, right? This was the inducement, and then price took us in, and then when price was about to break the structure, it gave us a flip that did not have liquidity, so it became liquidity for me. And then the fair value gap, 50% of the fair value gap was respected and we dropped. And this was just the entry I took for gold today being Wednesday. So study it, look at it. If you have questions, like I said, ask, subscribe, share, like, right? And I'll see you guys on the next video I make. Thank you so very much.